Today, we're going to go into house hacking and deal analysis. So people think a really complicated subject, but what I'll hint on in just a couple minutes here is that it actually doesn't need to be that complicated. And the reason it doesn't need to be that complicated is because there's a lot of really cool tools that we have available now that make it a little more streamlined. And if you stay till the end, I'll go into how you can get my tool. I charge $27 for this tool on 203ksecrets.com. And if you are here and you're watching this training and you watch it till the end, I will be giving that away for free, and I'll give you a link to do that. So without further ado, let's jump on into it. If you've been struggling to buy a house, or you're really interested in house hacking, you're interested in buying a property and being able to rent out other units, buy a multifamily property, 2-family, 3-family, 4-family, and you've been struggling to find something that makes sense financially, right? You're looking for a house hack and you can't find anything that's going to pay or cover enough rent, right? Or you're looking in your market and there's not a lot of multifamily inventory, right? You want a quadplex, but there's not a lot of them out there. This training's for you, because what we're going to go into is what has really separated, in my opinion, or not in my opinion, in my proof, the people that I work with, my strategy, and why we've been able to dial in house hacking, and most importantly, dial in home ownership as a huge leverage into real estate investing. When I got started, I bought my first property for $9,500 with a very low down payment using the 203K loan, which we'll talk about in a little bit more in a second. And I was able to use all the money from this 203K loan to buy the property, get all the money to renovate it. And because of that, I was able to force a ton of equity into the deal. I built $150,000 of equity into the deal. In addition to that, it was a 2-family, it was a duplex property, so I was able to live for free while I was there, and then profit $2,000 a month cash flow each month after the fact. So to say that gave me the best possible start in real estate investing is an understatement. This loan is so wildly effective. Some of the other loans we're going to talk about, when you actually implement them as an investor, which we're going to talk about how we run the numbers to really make sure that becomes a thing. You're watching the right training for that instance alone. Now, again, the reason why this works is what we're going to talk about today, which is deal analysis and how do we make sure that it works and what are the key components to focus on. So everything boils down to what I call value add investing. Okay. And value add, and someone asked me this the other day. What do you mean when you say that, Matt? Well, the reality is these days, there's no such thing as something that's move-in ready. You're just going to buy retail in the market that's going to make you millions of dollars. That's not the way that the real estate market works. It's not the way, actually, quite frankly, it ever worked. And the thing here is that when you look for opportunities in the market that are going to be able to increase your cash flow or increase your equity on the deal, you're looking for these kind of hidden opportunities that are going to enable you to find deals that are actually going to profit and make you a lot of money. So what does value add mean? Value add means looking for fixer-upper properties, okay? So anything that needs a lot of work, that's low-hanging fruit. The other thing is adding square footage, okay? Adding square footage to a property, adding an additional living unit, right? This is huge for house hacking, okay? And you have equity, and then we have the whole equity arbitrage concept, which again, we'll talk about in a second. So what's great about when you look for properties that need a lot of work and need a lot of input, when you're looking at house hacking, what's the goal of house hacking, right? The goal of house hacking is to buy a multifamily property and ideally get yourself some cash flow and get you in the direction of being a real estate investor. But what I see people struggle with so much with house hacking is they buy a duplex or triplex or a quadplex, but the problem is it's typically move-in ready and they move into it and then they have nothing to show for it. They have no equity, they have no cash flow, and they have more tenants to worry about. And that's a big problem. The whole idea here is that if you buy a property that has some value add capabilities, you're going to be able to make it cash flow easier, build some equity on the deal, and by nature of that, be able to take that and go buy more real estate, which is what we all want to do. We all want to invest and eventually leave our jobs or supplement our income and just use real estate as an asset that we all know that it is. So the cool thing about value add investing is that you can increase equity. So equity will go up. You can increase cash flow and you can increase ability to repeat. Because when you have that cash flow, you have that equity, your ability to continue to do these things is going to just go up. So what I tell everybody is if you could focus on one thing, focus on fixer-uppers and value add opportunities, okay? Now, where am I going with this? Okay. Where I'm going with this is everything that we're going to do is going to lie out in making sure that we find properties that are perfect for 203K loans or fixer upper loans or anything like that. Because in this day and age, the only way to make house hacking work, in my opinion, and what we're seeing firsthand, is when you look for properties that are distressed. The days of, and this really never existed, I don't really know why people thought it was ever this way, but the days of like buying a quadplex and walking into it with $1,000 a month cash flow that was just move-in ready, the days of that are over. Quite frankly, never existed, but maybe for some people they got very lucky with this. And we're not in the game of playing luck, we're in the game of being very intentional on the way that we do our strategy. So that being said, the way to get around this and the way that you're able to hack this, hack house hacking in 2025, is by leveraging a lot of these new instances and a lot of these things when you do your deal analysis and do stuff like that. So anyone have a market that they want me to look in, and we'll start and we'll go through the process, and I'm going to show you how we analyze our deals. And there's going to be a couple cool tricks on the little new tools that we're able to use. And then I'm going to show you through my deal analysis software on how to do this. Go ahead, comment below your market or your zip code or whatever. And what we're going to do is we're going to go through our deal analysis process very quickly so that you can understand really why we do this. Now, the point of this process is that the process is not as important as finding the deal. Okay. And we're going to get into why that's important in a second. But the reality is that the way we analyze everything's a deal at the right price. Nothing is going to be a deal at asking price. And I just need everybody to understand that. Okay. Write that down. I'm going to say that again. Please pay attention to that. Nothing is going to be a deal at asking price. So if you have that in your head, please get rid of it. It has never been the case. It never will be the case. Because why? Asking price is a number that's going to benefit who? The seller. Your price is the buy price, which is actually what dictates the actual price of what it's going to sell at. Asking price is just it's a suggestion. It's what they'd like to get. In a perfect world, I'd love to sell my real estate portfolio for $10 million. I will not sell it for $10 million because it's not worth that. Okay. It's worth 2 and change. However, I would love to get 10 for it. But do you see what I'm saying? I can ask whatever I want on it. But the reality is that it's only worth what someone's willing to pay. So I'm looking for comments here. Sorry, again, you're going to see me bopping back and forth to find something. Mikey Mike, we're going to go with New Haven, Connecticut. All right. I'm going to use Zillow I'm going to use Redfin. I'm going to use guys. And again, please, if I'm not picking your market or anything like this, just understand that we're going through the process of finding a deal and what it looks like to analyze a deal. We might find something and it might be trash. Okay, so we're doing this live though so that you can learn from me. Okay, so New Haven, Connecticut. All right, for Mikey Mike. Okay, so here's what we do. Now, what I like to do first and foremost is always start with the end in mind. And the way that we do that is we understand what the top of market pricing is, and just to understand what the things are selling for at the high cost. Now, we're going to go into some really cool things that we can do with this, okay? So the way we do that is that we like to start with the end in mind. I'm an engineer by trade, and I like the idea of reverse engineering. If you want to figure something out, start with the end and go backwards to find out how it works, okay? So what we want to do is we want to look for recently sold properties. And for something like multifamily properties, let's start with that. We're going to go back a year. I'm not suggesting you go a year. If you could do a tighter thing, do a tighter timeline. However, that being said, multifamilies are less plentiful. So what we're going to do is we're going to start by sold, and we're going to look for multifamily properties. Okay. And what I really love about Redfin is this function down here is that you can download all of these prices. Now, we're not going to get into that right now, but what you're able to do is you're able to put this in like a list view. Okay. So we're going to go through, and what's really cool about Redfin is that they give you the price per square foot of all the recently sold properties, okay? So what's really cool is what you can do here is that you can take these prices and you can go to ChatGPT and use AI to find this for you. Now, I'm not going to go too deep on ChatGPT. I'm going to show you a couple tricks about ChatGPT in a second, but it's really effective on finding things and doing data for you really quickly. So just looking at this, I like to see, okay, what are the price per square foot of multifamily properties that are in New Haven, and what are the higher end prices? Now, again, this is a quick deal analysis. We're going to do deeper, but this is just to get a good idea in your market. So as you're scrolling through, these are recently sold per square foot properties. And what I'm looking for the higher numbers. So it seems like stuff in the 2s are things that are selling higher, right? So this is like a 250 price per square foot. So let's go and look at this property here. Now this looks like it's pretty fixed up, and I don't really know exactly the condition of it, but it looks pretty fixed up. Well-maintained two-family home. So it has new siding, fresh modern look. So that's good. So we know that this is something that's mildly fixed up, sold for 250 a square foot. Let's look at this 237. That doesn't necessarily look too fixed up. Let's see if we see anything else in the 2 range. So we go here. This is fully renovated multifamily in the Quinnipiac River area. So this is a safe one. So we're looking at 250 a square foot. They said it's fully renovated, so that was 250 a square foot. So it's seeming like in this market, we could say that in the 2s, you're seeing stuff that's completely fixed up, fully remodeled two-family home. So we know that when we do a full remodel on a house, we can expect to make, I'd say, about $240 a square foot. Now that number is really important here. We're going to put this in this calculator over here. And the upper price per square foot in this market is about $250. Now, what we're also going to do is we're going to find out the average price per square foot in the market, okay? And we're going to see that's down here at $145. Okay, so we could come here and we could put this price over the average and then put the 145 in there. Okay, so what's great about this is that you're able to take these prices now, and now you can come up with good decisions on how you find your deals. Okay, so going back to New Haven, what we're going to do is we know what the price, we started with the end in mind. Okay, so that's the great thing here. We start with the end in mind. Now we're going to go back for sale. And a little quick hack is I always like to look at under contract and pending as well, because I don't like to leave any list unturned. We're going to go back to photos, and we're going to sort by low to high. The reason I sort by low to high is because we want to look for the shittiest properties, because what we're going to do is we're going to leverage what I talk about, which is 203K loans, home style loans, these loans that allow you to give you all the money to renovate it. So this one looks pretty dang beat up. I don't really know. We don't really have many pictures on it, so let's leave that one out, but these are boarded up. This one's a pretty good one. This is a nice one to look at. So this one is 2,500 or 200, Jesus, 2,500, 250,000, excuse me, been a long day, 250,000. And you could look at the condition. This is a little shot and it's very tight quarters in here. So this could be potentially something where you add square footage, but it might not be easy in this property. So let's just keep looking here. Let's go back to our search. And what we're doing here, and again, I'm going to pick one that I want to just go through, but we could look at this one. All right, this one's not in too bad a shape. This one's actually in really good shape. It looks like the electrical and these components look pretty good, right? So this actually might be not a bad one to do. What we could potentially think about is, what if we expanded the square footage about? And that's the equity arbitrage model. So let's assume that like this back thing here is like an outside entrance or something like that. Maybe you could bump this out or bump out the bottom floor or something like that. You have so many different options with this, but this is listed at 119 per square foot, right? The unit's already occupied. It's an ideal investment looking to do some repair, to get additional revenue. Their access issues are currently present. They need to fix up some stuff. So this is great, right? This is one that we could work with, but I want to find something, you know what, as we go through this, I want to find something a little bit better than this. Something that needs a little bit more work. This one looks this one looks pretty good. Let's see. Yeah, the condition's not bad on this. So the reason I'm looking for stuff that's in ugly condition is because that's what we talked about before. We want to get the best crack at our thing, at our house hacking opportunity, because the more messed up it is, the bigger fixer-upper it is. Like again, in this case, geez, this is pretty rough, right? In need of rehab, do not enter back deck or bathrooms, deemed unsafe, floor is rotted out, okay? So this is a real shitter, okay? But it's selling at 148 per square foot, and we know that there might be some range in there if we're looking at selling for 240 a square foot. So let's just use this as an example, because I think it's a good example to also talk about what you should offer at, right? So we know it's 1,500 square feet. So what the current price is of the property. So they're looking for 220,000. We're gonna put in the offer square footage, which is, I think it was like 1489. Now, in this case, this property needs a significant amount of work, right? We're looking at somewhere in the neighborhood of $100 to $150 a square foot, because they said it's falling in on itself. So we're going to go on the high end. Now, if you look here, how to quickly estimate rehab costs, you could do that here. But here's a cool thing. We could go to ChatGPT, and if you don't use ChatGPT right now, you are failing. You're losing in life. I don't mean that in any mean way. I'm just saying if you don't figure out how to use ChatGPT, it's going to slow you down. I've tested this. I'm not saying it's going to be perfect everywhere, but I am currently renovating my own house right now, and the numbers that it gave me for my own area were wildly accurate. It's crazy how much it knows. So what we could do with this is you can go into ChatGPT, and I would pay for the paid version because the paid version is a lot smarter. You could ask ChatGPT, hey, Chat, I'm looking to do a full gut renovation on a 2-family home in New Haven, Connecticut. Knowing what you know about cost of construction, what do you think is an average price per square foot price for doing a full gut renovation with a reputable contractor? It's going to say that something for like doing a average cost per square foot for such a renovation typically ranges from 60 to 150, which I think is fair. I think I said $100 a square foot. They can vary significantly in cost. So again, you're not going to nail these prices down. The point of it isn't to nail prices, but we want to get a rough estimate. So it said 60 to 150. I think that's a wide range. So let's just say 120 to be fair. Okay. So your total rehab estimate of something like that is going to be a hefty $180,000. Your total purchase plus the renovation cost is going to be about $400,000. And again, your minimum down payment is going to be $13,000. We're not going to get into the specifics of the down payment and everything like that. But what's cool about it is you could do all of this and that's exactly where you're at. Now, what's really cool is we have it built into the calculator where it's also going to spit out your mortgage amount. Okay. So it's going to come down here and based on everything we know about the current interest rates, and you can adjust this based on your interest rate. It's going to tell you how much you have to put down, your PMI. Now your taxes, we have to check out taxes on this. And let's go here and check taxes. Now, I don't know what it is offhand. You might have, I don't know if we're going to be able to get it here. Let's see, tax information, tax history. So 5190 per year is your taxes. 5190. So we're going to do 5190 on your taxes. So that's 3,200 a month. Okay. So we're going to put that 3,270 here. All right. And then what we want to do next is we want to find out what this thing's going to rent for. Now, we know it's a 2-unit property, and I think it was what, 4-bedroom, 2-bath. Yeah. So it's a 2-2, a 2-1. Okay. So Rentometer is a great software. I use it all the time. I highly recommend you pay for it. $7 a month. It's completely worth its weight in gold because what it does here it helps you estimate renovation. So what you could do is come here and it says I've reached my limit. So again, I wasn't using it today. Let me see if we can get around this. I'm not actively using it right now because I'm not actively looking for a property. So I say just use it when you do it. If we can't use Rentometer, what we'll do is we'll go to Craigslist. Okay. And we'll go to Craigslist and we're going to look in the New Haven area. Okay. And we're going to choose this location. Now, Craigslist is a great place to do it. Go to apartments. And what you could do is look for 2-bedroom, and you come here and you go to 2 bedrooms and 1 bath. Okay. And then you hit apply. Now it's going to tell you all the 2-bedroom, 1-bath property, and you have to find something that's relatable. So it's like something that's a house rental. This looks like it's a house rental. This is something that's good. So this is about $1,500 a month. This one's $1,800 a month. This is on a 3rd floor. So this would be great. This would be a great comp. This is $1,800 a month. This looks like a nice one. This isn't even fully renovated, but 3rd bedroom, 12-bedroom. It's a pretty big size. Actually, this would be a bad one because it says it's 1,200 square feet. But you could go through and you could look for something a little smaller. I'm seeing it around, yeah, this is 1,200. This is 700. I'm seeing 1,500. Now yours would be better renovated than this. But what's cool about it and what's big about the way that I do this is I always run the numbers such that we are going to be able to buy the property and eventually move out. You're going to live in it while you're there and see what the house hack. What I look for is when you move out of the property, will it cash flow? It's not going to cash flow while you're there in many cases, unless you get a screaming deal. That's a common misconception. But the idea here is if you can buy this property and you can build equity on it, which we'll talk more about in a second, you could build equity and you basically say, I like to say it's like buying a Lamborghini without having to pay a Lamborghini payment. You're getting a really great product, which is a whatever $1,000 house. You're getting half your rent paid for. That's keeping $1,500 a month in your pocket, right? So we have 2 of these units, so it would rent for $3,000 a month. Now we already see where we're going with this. It's not really going to fit the bill. We're going to be a little short. In order for it to be at the 1% rule, we have to be at $3,900 a month in rent. to make it happen. Now, again, we're not going to be there and we don't necessarily need to be there, but that's why we're going to tweak the offer. I think this thing is very overpriced, and that's probably why it's been sitting on the market. Okay. So what I said to you before is the upper price per square foot in the market, right? So we said here it's 250. So that when we're fully renovated with this, it's probably going to be worth about 372,000 when we're done. So let's just say 372. And again, the calculator does it for you, and I'm going to show you how to get it at the end. So we have negative equity. Nothing's really shaking out here. Nothing's really making sense, and nothing really is making sense here. Now, here's the cool key thing. What we're able to do here is I was able to take this and see what should we spend our time on. And what I say is, if you can offer 20% less than the average price per square foot in the market and see what that property is going to be, then what you can do is that you can find a good deal. Okay. So the point of what I'm trying to say here is, as we go through the deal analysis, the analysis isn't as important as placing the offer. And this is the biggest thing. We're looking for value add opportunities. So nothing is please, if you get this, please type value add in the comments if you understand what I'm saying. We are not buying retail. I'm telling you right now, there's no one in the real estate investing community that buys retail and makes money. The problem is you have a lot of real estate investors that are new that think that real estate investing, like finding a deal, is just going on Zillow and offering for things at asking. And you're going to get beat out by competition. But the whole thing is that you're going to stay in the game longer, placing more offers, and eventually you will find something. The people that I work with, the clients that I work with, you're placing 10 to 20 offers before you find a deal. If you know that going into this game, you're going to know that if you stay true to your numbers, not only are you actually eventually going to find something, but you're actually going to make money on it and not be all these people that get into something that aren't worth it. So what I did here is I already gave you the suggested offer price using this calculator. I think, looking at this property, this is probably $172,000 because, again, it's been sitting on the market. It's obviously overpriced, and I'm going off of what the average price per square foot is in the market. So if the listing agent asks you, say, hey, listen, this is what everything else is selling for. You're trying to sell it for this. Here's where I'm at. Okay. So what you can do here is you can go back and put the suggested offer price in, which is 172,000. And let's see where the pricing lays out. Okay. So we can go do this again. Again, the renovation stays the same. All that stuff stays the same. All right. And then what we could do here is put in our all-in cost again. All right. And what we could do is B9. So B9, blah, 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 blah. Okay, so now we're down at $2,900 a month. So this is our estimated monthly payment. Okay, and now we're breaking even. Again, not great, but we're there. And then our after renovated value here is $372, and you got $33,000 in equity. Not bad, not great, but something to consider that, hey, listen, you're doing all this work and it's not penciling out. So in this area, in this market, you would even go lower. You would go to something even lower than that, right? You would go to a lower price per square foot. You would offer 150 or something like that. What you could do is you could keep playing with this number until you get to a number that actually makes sense for you, right? So let's do 28, okay? Then now you're at $55,000 equity. $55,000 of equity isn't bad. But what you're doing is you're going off of the numbers that are already there for you, okay? And what's really cool about this is you can do this, and you could also ask ChatGPT. And when you look for your properties and you scroll down to the bottom here on Redfin, you can download this. And what you can do is you can create the Excel file, spit it into ChatGPT, and ask ChatGPT, hey, can you analyze this file and go tell me what the average price per square foot is in the market, and also remove any outliers or anything like that. By doing that, you're going to be able to not only know your market, but also know what things are trading for in your market. So when people tell you you're lowballing, you don't tell, I'm not lowballing. I'm just at the same price that other investors are in the market. Okay. Again, the beauty of all of this is that you're able to go through and make tweaks as you go. Now, to go back to what we were talking about before, which is like some of the equity arbitrage stuff, the big number one key that's going to help people win this game in 2025 is looking for properties that either have opportunities where you can expand the square footage, increase bedroom. So that's another one. I add bedrooms in units. Okay. Add bathrooms. And what I mean, convert garages, porches, etc. into living space. Okay. Now, this is what people that I've worked with, my clients have been able to do tremendously. What we do is we work to find these additional properties. And as we're going through this search, and we'll place an offer on this, but what we're going to do is we're going to look for properties with screened in porches, with other units, other bad usage of space. And what we're going to be able to do is we can take that and use the money that we're doing to do the renovation to add the square footage. And what I mean by equity arbitrage is just that. Okay. So what we're gonna talk about with equity arbitrage is it's your upper price per square foot in your market. And pay attention to this. If this is the only thing you walk away from, if you walk away with this hack, it's going to completely change the way you think about real estate investing, especially in this market. And this is the absolute unequivocal best way to leverage 203K and home style loans. Okay. Why it's important to find that upper price per square foot in your market is because once you know that, and then you know what your renovation for pricing for adding square footage in your market is, that delta is going to be increased equity on your property. Okay. What I mean by that is here we know that there's $250 a square foot on average for every square foot you add to the property. Okay. Now we know that we can probably do a full gut renovation or even add square footage for $120. Let's just even say that it's going to be $150 to add the square footage. So it's another $130 per square foot to frame out and do like the foundation work or whatever needs to be done to get the extra. But do you see the thing here? There's $100 per square foot in that. So imagine here that we looked for a property that had a screened in porch or an accessory or in a garage that you can make into an accessory unit. So not only do you make it an income producing unit, but you also create more living space. So let's just say that added 500 square foot to the property, and now you have 2,000 square foot of living space. So now what's great about this is now you're looking at the property in a different light, right? Because you're offering 150 or let's say 175, but you're actually upping the square footage of the property, and you're now increasing its value tremendously in an instance where upper price per square foot in the market. So now you upped it to a $500,000 property. Okay. Now, if it's a $500,000 property, you could come here and add $500,000. Now you're looking at significant equity. Now you have a better cost per ARV, and now you have an even better ability to rent out the additional space, ideally fetch more rent for it. Okay, so the two numbers to focus on are right here: your average price per square foot, the upper price in the market, and then what the rehab price in the market is. When you dial that in and you could find the gaps between there, and you can find properties that have basements or screened in porches or underutilized spaces or attic spaces that you can convert, this is the hack for 2025. Okay, so is everybody understanding what I'm getting at here? Is everybody dialing in? Again, you do this in 2025. If you find the value add opportunities, you are going to turn your house hacks into complete equity and cash cows. All you need to know is the price to add square footage and the price that the top end of your property is when you add square footage to the property. And that will inevitably filter down into your cash flow. Because we all want cash flow and we understand the benefits of cash flow. But I will be very honest here. When I first started in real estate investing, I thought cash flow was king, and I said it a lot. Having now owned real estate for almost a decade, I can tell you that cash flow is really cool, but the big game changer in your life is going to be your equity. Why? The more equity you have, the more lending power you have, the better ability you have with banks to pull out credit lines, to do cash out refinances. That equity and that net worth is so much more powerful than the cash flow you make every month. That cash flow is going to help you quit your job or help you go into different industries because it's a buffer that's going to help you. But you will not get rich off of cash flow, at least not immediately. The way you get rich is off of equity and leveraging that equity to be really fast to go get more real estate. When you have a lot of equity built into your properties, banks, lenders, people you do business with look at your P&L statement and look at your net worth statement, and they know that you're very good to lend upon. And that's how, if I passed away tomorrow, God forbid, I know the cash flow is great. But what I really know is that if my family had to deplete all my assets, that they'd walk away with well over $1 million. And that would be enough that at least would set them up. That's way more powerful. And you can get, if you make $500 a month in cash flow, that's great. But if I built $100,000 in equity, how long would that take you? That would take you 50 years to make that in equity. Does everybody understand why equity is so powerful? Type equity down below if you understand why equity is powerful. Because we think that $1,000 a month cash flow is great, and that's awesome. But again, if you're making $1,000 a month cash flow, but you built $100,000 of equity in this deal like you did here, that's $1,000. That would take you 10 years to make that money. 10 years to make that money, but instead you just compressed on your equity 10 years in the first month or 6 months that you bought the property. Okay, so that's really the key thing. So who here wants to know how to get this calculator? Okay, so if you're interested in the calculator, go ahead and go to the 203kway.com slash, sorry, you would be able to see it, 203kway.com/calc. Again, I offer this on 203ksecrets.com along with my big book as a bundle, but I am not doing it. Thank you for everybody that shows up to this training. I'm glad you're here, and I wanted to give this away because I don't want there to be any excuse on why you can't get going. Okay, so the 203kway.com/calc bring you to the website. Just filling this in, and it'll send one to your email. If it doesn't work, let me know. It should work. I tested it out before we jumped into this, but the 203kway.com/calc, and we'll get it going. So listen, this is how we do this. The reason I do these trainings is, number one, to help you. Number two, what I also do is I hope to let you know that I pour my heart out into my community. And if you could see what I do to my community, you can only imagine what I do with my private clients. I am hands-on. I work with you personally to make sure, and I guarantee I will look with you to find these deals. And we add a lot of other things, how we find these deals off market, how we find these deals using AI. Okay. If you're interested in doing that and you want to apply with me, it is a by invitation, by application only. If you're interested in this, you can go to the 203kway.com/apply. Again, you can come here. I want to ask you some questions to make sure you'd be a good fit with us. But my guarantee is I work with you as long as it takes to get the deal done, get you a cash flowing and high equity property using all the tactics that I work with my personal inner circle members and the clients that I work with one-on-one. So if you're interested in that and that's something you are ready to go, you have your down payment ready, and you are serious about this in 2025, I want to open up the invitation for you to apply to work together. Once you apply, it'll link you to my booking calendar. We'll book a call, 45 minutes. Me and you will talk. If it's a fit, we'll talk next steps on how to onboard you. If it's not a fit, I will let you know, because again, I don't have any benefit of working with someone it's not a fit for, because we hit the ground running fast and we get you results very quickly, because I've done this hundreds of times with many people and I know how to streamline it. If you have any questions about that, please go ahead to 203kway.com/apply and we can talk on the phone about it. If you're interested in the calculator, go ahead and grab the calculator. Thank you for hanging out. Thank you so much for jumping on, and we will see you on the next one. Peace out.